Monday afternoon, October 10, and I want to clarify a few points and add a few points. People were mentioning last week they didn't know what I was saying. They didn't know if I was bullish or bearish, and so this is what I'm trying to say. So let's talk from the top down, from the big picture down to the point, to this shorter term stuff. Longer term, I think we're in a secular bear market, and the secular bear market is going to drag out into at least 2024. I think we're in the early stages of it. I think the first 6 months of this year, from January through June, were the first attempt for the market to go down. And then I expect it possibly will go a bit lower in the remainder of the fourth quarter, in October, potentially November, and even December. There could be new lows. But I don't expect much deeper lows. If they are there, it could be just slightly lower, and they could even be retests of the 3,600 area. We were initially saying 3,400 would be the low this year, and it may be the case, and it may happen in the next month and a half. Okay. However, this particular phase of the bear market is not super bearish. This is the time it's consolidating and preparing to do some kind of a rally. I think the rally is going to last into the spring of next year. And the rally may not be dramatic, and it may not be giant, and it's not a new bull market. But it will be an upward directed trend that should start in this quarter, possibly, I think, in the November 20th area, which was where we've been saying this the whole time, and ending at least in April of next year. Along the way, there'll be ups and downs. There'll be sharp moves up, sharp moves down, and there will be a lot of continued uncertainty, which, by the way, bull markets tend to move up on uncertainty. You know, when people are sure what's going to happen, it almost never happens that way. All right, so that's the big picture. The second half of 2023 is likely to be continued bearish, with the S&Ps going down below the 2022 lows, potentially to 3,000 on the S&P. Okay, and that's quite a bit lower, particularly if it gets up into the 4,400 area or so before it starts. So that's the big picture. We're in a choppy bottoming area, which is likely to eventually turn into a little more bullish phase going into next year, into the April area of next year. Now, shorter term, what's going to happen? Well, it's a difficult period in here because there are fighting cycles that are working in opposite directions, and that's why the market has shot up last week, shot down, but didn't really collapse. And now it's hanging around the lows, and you don't know which way it's going to go from here. Okay. Most likely scenario is between now and at least the 22nd of October, there should be some sort of a rally that is significant enough to look like the market is no longer going down. In other words, it could reach the 4,200 area. It is possible there could even be one more down day this week, and even possibly one more down day on the 19th or 20th before it gets going. But my emphasis, and most of the cycles are saying, that we're going to try to rally up into the end of October and potentially even into the election, and before any major sharp-edged declines begin. After the election, I think there is a sharp decline for a few weeks in November, potentially another one in early December, taking us down where the 20-year cycle bottoms around the 10th of December. Okay, so I don't know exactly what's going to happen in October, but I don't expect to see a huge crash. I don't expect to see a huge crash in November, but there could be a new low beyond the 3570 area, which is the last low, and the next support is at 3,500, and then the next support behind that is 3,400. Both of those are possible before the end of November, and it's also possible the market will mount a rally that's large enough to make those targets seem unrealistic. In other words, if the market goes up to 4,200 before it goes down, or even goes to 3,900 from where it is now, before it goes down, it'll seem like 3,400 is a big down move. All right, so then there's a couple other points. The astrology. This 60-year cycle based on the Jupiter-Saturn synodic cycle is repeating very, very well. It has been for over a year and a half. And that was when we had the Cuban Missile Crisis. And what's happening was the Cuban Missile Crisis hit its crescendo between the 16th and 29th of 1962. Market fell down, and there was no atomic bomb going off. But at that time, the market fell 7.5%. 7.5%, it's a decline, but it's not a crash. Okay. If indeed such a thing happened again, it's most likely going to happen the late part of October into the middle of November, when Mars goes retrograde. And some of the other astrologers have been talking about remarkably negative things and wars and world wars and, nuclear whatevers. I don't think we're going to get a super bad scenario, okay? I don't think there's going to be a nuclear bomb dropped, okay? However, there could be a scare, and there could be a threat, and there could be a confrontation, much like with Kennedy and Khrushchev in 1962, almost exactly 60 years ago. The astrology is extremely similar, okay? And at the same time, the market rallied dramatically after that. So whatever's going to happen, if it is a sharp-edged kind of a thing and there's a world event that's scary or whatever, that's not going to cause a bear market. That'll cause a 1 week or a 1.5 week huge, scary period where the market may go down 7-10%. But that's not a bear market. That's just a sharp-edged bad week. After that, it could easily recover, make new highs for, into the 42, 43, 4,400 area into next year. Okay, so that's what I try to clarify, that we're in a bottoming phase before an up move, not the beginning of some massive decline in the fourth quarter that's going to keep going down and down and down. You'd be buying lows here, not selling rallies, not until April. Okay, that's the basic structure. Now, the other thing that's interesting is that Kennedy had to make a deal with Khrushchev at that time, and it was done initially. It was a secret, and it's possible there could be some conversation going on that's behind the scenes here that will ameliorate Putin's angst, his craziness, and diminish the likelihood of anything extremely severe. But he's undoubtedly going to do some more chaotic stuff. The Chinese are on the edge, potentially, of doing some chaotic stuff. But I don't think anything dramatic will happen this year. Why? Because Jupiter is in the Pisces, which is a very positive, uplifting sign. And also because most of the patterns they're not bearish. The 1947 market, which we talked about, it's slightly bearish. The 1962 market has that sharp down 10-day period, and then it goes up. Another very good fit, which is 22 years ago, is the number one fit over the last 4 months, and it goes up. It doesn't even have a sharp decline. The 1900 market, which is literally almost identical to 2022, it goes up. So what I'm seeing is a setup. The sentiment is very, very, very bearish, which means that type of sentiment usually is enough to get a market to rally. And of course, when I say rally, I don't mean a new bull market. I don't mean it's the beginning of something where you can buy and hold it. But the probable trend over the next 6 months will be dominated by more up than down. Okay? And there'll still be some sharp declines in the next few months, but it's not to be seen as a kind of crashy 2008 pattern. By the way, have you subscribed yet? We'd love to have you as a subscriber if you're interested in this stuff. And we want people who are interested, I don't just want anybody. But if you're interested and you like this stuff and you think it's value add, please let us know and give us a thumbs up, do some subscriptions, send it to your friends to let them subscribe. You just need a Gmail account to subscribe. And we're looking forward to next time.